Hey everyone, hope you're all doing well. Back here on the daily chart for silver on December 27th. But before we take a look at the chart, I'd just like to thank everybody who's been subscribing and watching our videos and leaving comments over the last couple of weeks. It got pretty busy for me, I know, around the middle of November. Luckily, my brother's been able to put up a couple of coin roll hunting videos every now and again. However, for me, I ran into a couple of papers that were due by the end of November. Both of them were 75% papers. And then it seemed like it transitioned right into exam period. And then at that point, I just had no time and very little motivation to get some videos up for you guys. But again, we'd just like to thank everybody who's been leaving comments, and especially the people who we've yet to reply to. What I'm going to do is in the future silver analysis videos, just kind of take a handful, probably 3 or 4 questions every video, and answer them for you guys. So if you have left a question, just look out in some of our future videos, and I will do my best to reply to some of the questions that you guys have left. Also too, we have quite a few coin roll hunting videos already finished at this point. I got a couple of boxes a couple days before Christmas, and then even some on Christmas Day that my parents wrapped for me and gave to me as a Christmas present. So some of those are already finished, so expect those ones to go up in the next coming days as well. But again, just getting back to the chart here, there's been a pretty significant move right over here after the 12th, which was pretty ironic since that was the day that Ben Bernanke announced his QE Infinity that was going to take place into the future. And there was really a perfect storm for silver to head downward at that point as well. I drew in a couple of indicators here, just starting with the Fibonacci retracements, going from this high in here on October 1st all the way down to this low that we experienced at the beginning of November. After the 12th, on December 13th, we did break through the 61.8 significant Fibonacci re-level, which basically means that this was a failed move up, and we reestablished this downward move that we did from the beginning of October to the beginning of November. So again, we broke that significant level, and also too, we broke through this upward trend line that was established at the beginning of August and really has gone pretty unchallenged only a couple of times in here. And on that same day, we did break through that upward trend. So that was our second indicator that was telling us that there was a potential move downward in silver. And then also too, the third one was in the MACD, where right on cue on December 13th, right after the Bernanke announcement, the MACD broke through the zero line, and it went on to make a lower low from this low up in here. And again, we're just starting to round out of that now. So those 3 indicators gave me a heads up that there was a potential move downward, and when it did come, it did move pretty fast. As you see, it seems like each day was more significant than the previous day, and just now we're getting into our sidewards consolidation. And there's been a couple of predictions out there that it is possible to go back and retrace this $26 mark in here. I do think that that's in play, but right now I'm just going to be watching this sidewards consolidation. I do probably think it's more likely that we do go down to test 26 than it would be to, say, go upwards in the $4 range. But again, I'm just going to keep an eye on it. I haven't been checking out the charts too much in the last couple of weeks, so I don't want to make too many predictions on what potentially could happen. But again, it's a very interesting time in silver, and we'll just go ahead and look at an article and take a look why, even if it does go up or down, whichever way it does ultimately play out over the next couple of months, I'm not too concerned. I'm probably going to make a silver purchase within the next couple of days. So we'll go ahead and look at that article now. So as I'm sure you've all heard by now, 2 weeks ago the U.S. Federal Reserve announced that it will be purchasing $40 billion worth of U.S. Treasuries each and every month. And this is in addition to the $45 billion that they were going to be purchasing with their announcement in QE3 in September, $45 billion worth of mortgage-backed securities each and every month as well. And of course, those mortgage-backed securities are the toxic assets left over from the crash of the housing bubble in 2008. So basically now, going into 2013, we can anticipate the Federal Reserve monetizing, which of course means printing money out of thin air. They'll be monetizing about $1 trillion next year of these different types of securities, the Treasury securities and the mortgage-backed securities. And the really interesting thing about this announcement as well is they're going to be tying it to their inflation rate or their unemployment rate. They're going to set their target for 6.5% unemployment or 2.5% inflation, which of course this means that this could go on perpetually for as ever long as they hit those targets, which means that this is truly an announcement to start QE infinity at this point. Which is interesting, seeing as the 3 previous QE programs didn't help better things, specifically the unemployment rate. And also, too, the announcement, which kind of goes to show that they're going to be keeping interest rates perpetually low going into the future. This article seems to think until 2015 now. So it seems almost every Fed press conference that they hold monthly, the interest rates get pushed back further and further, where they're going to start raising them. I personally don't think that we're going to see them raised even further until 2015. I mean, this could probably go for Obama's entire second term, where we're going to see them around 0%. But again, I won't spend too long talking about this article. I'd just like to point out that they could have just as easily entitled this article, Fed Announces Program for the Long-Term Destruction of the Dollar in a Bid to Erase the Short-Term Pain of Unemployment. Again, I won't spend too much time talking about it right now, but again, looking into 2013, as soon as the fiscal cliff debate dies down, and as well as the debt ceiling debate, we'll take a look at that, but again, we'll also just keep an eye on the silver price and see how this announcement of QE infinity goes to affect the silver price early next year. But that's it for now, guys. I just wanted to give you a quick update. Thank you so much for continuing to watch and for continuing to leave comments and liking and subscribing the videos. Again, we'll do our best to reply to a lot of the questions that have been posted already. Also, too, as I mentioned previously, we'll post a bunch of nickel and penny videos in the next coming days. But again, that's it for now, guys. Hope you all had a great holidays. I'll see you next video.